And good evening. This is Mottek On Money, number one for your business and consumer news right here on Talk Radio 790 KBC. I'm Frank Mottek, and we are doing it live right here weeknights in the 5 o'clock hour in Los Angeles. Mottek On Money 5 nights a week for you, live on the air here in 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast for you at kbc.com, Apple, iTunes, all your favorite podcast platforms, and on the socials, too, at Frank Mottek on X, formerly known as Twitter, and Instagram. Well, it's Fed decision day today, and that decision is the Fed raising interest rates again to the highest we've seen in 22 years, impacting consumers and businesses out there. Borrowing costs moving up with the prime lending rate now at 8.5%, the highest seen in, 22 years. Mixed finish for the stock market today in reaction to all that and what turned out to be a volatile trading session. The Dow making it 13 winning sessions in a row. We haven't seen a winning streak like this since 1987 when President Reagan was in office. The Dow coming in for a closing gain of 82 points, settling at 35,520. The S&P 500 slipping just about 1 point at 4,567. And the NASDAQ pulling back 17 at 14,127. The three major averages finishing out a volatile trading session mostly higher today after wavering between gains and losses following the Fed's interest rate decision, which came down at 11 o'clock this morning. We did have a full-blown news conference from Fed Chairman Jerome Powell. The statement that went along with the decision on interest rates kept language saying that the Fed would look at upcoming economic reports, cumulative monetary tightening to date, and the lags with which interest rate policy affects the economy in determining the extent of additional policy firming that might be appropriate in Fed speak. Back in the days when we had Alan Greenspan as Fed chairman, we used to jokingly, Paul Kangas and I used to joke we had to get the Green Spanish dictionary out when Alan Greenspan was in office there as Fed chairman. The current Fed chair tries to speak more in plain language, but that was the end result there, just now what you heard. Shares of tech names Microsoft and Alphabet Google went in opposite directions today following their earnings reports and guidance that came out late yesterday. Alphabet Google shares ending nearly 6% higher today after the Google parent company topped Wall Street profit and sales estimates on strong advertising sales. Microsoft, on the flip side, down nearly 4% after Microsoft's management said the process of generating revenue from AI use eases would be gradual. And let's see, PacWest Bancorp, based here in Southern California, shot up 27% today as the Bank of California confirmed plans to buy the regional lender. PacWest and the Bank of California have gotten together here, and PacWest, the big winner today on that news. Well, the hot labor summer continues here in Los Angeles with the Kaiser Permanente healthcare workers now picketing Kaiser hospitals and medical facilities throughout Southern California this week, claiming understaffing and employee burnout have undermined patient care. Add that to the tally of labor unrest, along with the hotel workers here in the Los Angeles area, which have been very loud in their picketing throughout the area. Meanwhile, the strike against Hollywood studios continues by the Writers Guild and the Actors Union, SAG-AFTRA. Coming up later this hour, I'll talk about what's happening with the former president of SAG-AFTRA, Gabrielle Carteris, will be joining us live right here. Yep, Gabrielle Carteris, actress, producer, trade union leader, also known as Andrea Zuckerman on Beverly Hills 90210. Gabrielle Carteris will be joining us live later this hour right here on 790 KBC. How is billionaire George Soros spending his money these days? The answer might surprise you. I'll talk about that tonight with Aaron Bandler, investigative reporter for the Jewish Journal. But first, on the big news today with the Fed decision, the markets, the economy, inflation, the whole works. Joining us live now, Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Big Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan Hoenig, thank you very much for taking the call and give us your reaction to the big news here today.
The trend is up, Frank, and the trend continues to be up. We saw 162 new highs, only 84 new lows today, a new yearly high for the Dow, despite, as you said, I was about 13 years old in 1987, and we're seeing interest rates now moving higher, and the Dow on its best streak since 1987. What I do think, Frank, is that you want to stay flexible. You don't want to have all your money in this market. And more than anything, you want to be focused on the international and the deep value names. What you've started to see is that the big tech winners, the Microsofts, the Googles, as you said, they're really no longer leading the pack. I think inflation isn't dead. I think rates are going higher. It's why I'm focusing on a lot of the international and deep value names over at Capitalist Pig.
Back in 1987, of course, we had Black Monday. That was a market crash at that time, back on Monday, October 19th, 1987. And, of course, the market had that big crash, but then rebounded rather impressively, of course, since then. Jonathan, a lot of historic comparisons have been made to the inflation situation with what happened back in the 1970s and 80s. Now the Fed's still wrestling with the inflation. Obviously, the Fed talked about that today. And interesting to note that during the news conference today, the Fed chairman made news by saying the Fed staff is now forecasting a noticeable slowdown rather than a recession. They're very careful with their words here. Give us your assessment of where things go from here.
Well, you go back and read the headlines, Frank, from the late Ford era in the 1970s. In the mid-70s, inflation was going down as well, and there was that hope that we've turned the corner. Well, of course, 2 or 3 years later, it had shot up quite dramatically. And I think, in fact, a lot of stocks are giving us the best indicator that inflation simply isn't dead yet. I mean, oil stocks have taken off lately. DBA, which is the fund that tracks agriculture prices, it's at its highest point in a year. And a lot of the agricultural-related stocks, there's an ETF I follow, which is MOO, M-O-O. It's now at a 50-day high. So, the Fed might be optimistic that perhaps we've turned a corner on inflation, but I think you don't want to give up that trade just yet. And even energy, which we've talked about for quite some time, this is the time to own these names. They're going higher from here.
Isn't that something? Yeah, it should be noted. We've seen oil hover around $80 a barrel again. Nervous time at Southern California gas pumps when gas prices here in the Los Angeles area hit record highs last October. At least one station out there hasn't changed the price since then. With premium up around $8 a gallon still today, if you want to pay that much. So do pay attention to those price signs out there, folks. What about the oil names and what's the outlook there?
The rising tide lifts all boats, and I think you're going to continue to see oil outperform. And one name I really like, Frank, is Crack, C-R-A-K. Owns a lot of it, specifically the drillers. And, you want to be diversified even within this area. XLE is an ETF that owns all the big major drilling and oil stocks, Exxon and the like. So, as we said, the rising tide lifts all boats. And, I just don't think inflation's licked. I think this is a trend that's going to continue for quite some time here. So I like oil. I like energy. I even like some of the precious metals. As we said, Frank, these were all the names that outperformed in the 70s. And I think, interestingly, it's going to be the AI names, the tech that really led previously, that's likely going to underperform from this point on. I think you want to own the commodities and leave the tech. That ship has sailed.
Aha, there's the word, or two words, AI there, with artificial intelligence being part of every discussion now, and it certainly came up in the Microsoft earnings news. What about what you're picking up on AI, and where are you placing your bets there?
Well, there's a great potential in the technology, Frank, but some of the stocks have just come so far so fast. NVIDIA up hundreds of percent just this year. So, I liken it very much to, for example, the pot stocks, the cannabis-related stocks. It was seemingly all we talked about for years. Now, usage has expanded, profits have expanded, but those stocks are all down quite dramatically because their valuations have contrasted. So, look, AI is exciting, but it's also front-page news. That's why I think it's probably better left to leave these stocks by the side and look for what's next. And I think it's going to be a dramatic rise in inflation and a dramatic drop in the value of our dollar.
And what about the cannabis stocks, which we haven't talked about in quite some time? The banking issue related to the cannabis industry nationwide still has not been resolved. What do you see there?
This is a great example, Frank, of why we talk about in Price's Primary about why you never want to double down. Some cannabis stocks are down 60, 70, 90% from their highs, and they continue to be low. This is an industry that's going to be plagued by oversupply, complete lack of barriers of entry, and it's just been a fascinating example, Frank, of just when you think a weak name's going to turn around. So I think you want to avoid cannabis. Much better to focus on something like, for example, like DBA we talked about. Now, it's not cannabis, but it's corn, wheat, and soybeans. A lot of these names got a major boost when Russia kind of basically cracked down on Ukraine grain exports. So, as much as we're paying now at the grocery store for all these agricultural products, I think prices go higher from here. So DBA is one I think you can own even at current levels.
And now hallucinogenic mushrooms getting a buzz. Any names in that sector? Apparently, Janet Yellen might have been served some of those mushrooms during her recent visit to China, by the way. That's become a hot topic, and looks like states are now looking to legalize some of that stuff.
Yeah. Frank, this has become quite a fascinating show. You're into some really freaky stuff over there.
We're all over the place.
I'm glad to hear it. Look, I haven't followed that, but I do like the emerging markets. You mentioned Janet Yellen. She's been all over the Far East. Vietnam is one area, Frank, where a lot of companies that had been doing business in China, they're moving to Vietnam for a more stable supply chain. So VNM, that's an ETF that owns stocks from Vietnam. It's up upwards of 30% just this year. And, Frank, it's undiscovered. I mean, everyone's talking about AI, but not too many people yet, I think, are on the emerging market bandwagon. So Vietnam VNM is one I think you can own at current levels, and I own it over at capitalisppig.com.
All right, let's talk about something I know you're following. That is the banks, and, of course, that big bank merger here in California with PacWest Bancorp hooking up with Bank of California. And it looks like PacWest Bancorp shares rocketing 27% on that news today. What about these regional banks and the banking sector overall?
Well, look, it's a great example, Frank, for me to give you a mea culpa. I mean, on your program over the last number of weeks, I've been very cautious on the banks, and they've really turned around. And in fact, a lot of them are leading sectors right now. I mean, J.P. Morgan has been at 52-week highs repeatedly over the last couple of months. So, look, I don't own any banks, but I don't think you can fight them, and many of them are going higher. One name I like that's a little more off the radar screen, if you want to add some banking exposure, is EUSN. EUSN. It's actually an ETF, Frank, that owns European financials, many of which are at 52-week highs, which is a bullish sign. So it's a way to get that weak dollar exposure and the banking exposure. I think they go higher from here. And, in fact, higher interest rates historically have tended to help the banks who borrow short and lend long. So this is probably bullish for the banks, and I like them at this point.
All right, and what about the media names? We're going to be talking to Gabriel Carteris here in a few moments, right after you here, Jonathan Honig. And what about what's happening now with this hot labor summer continuing, the writer's strike stretching now for nearly 3 months or so, the actors' strike now a couple of weeks old. What do you see happening with the media names and how this is all going to play out?
Well, Gabriel Carteris, I mean, touched by an angel, NYPD Blue. I mean, what a career. I'll be listening to that interview, Frank, and glad to hear that. I mean, media has been a lagging sector, and I think it's one of those areas not unlike newspapers in the last decade or so that has just been, irrevocably changed by the presence of this new technology. I mean, the new stars, Frank, aren't on cable news or even broadcast news. They're on YouTube. They're on TikTok. So that's really where the action is. Not a lot of barriers to entry in these areas of new media. So I think most of the media stocks, especially, as you said, given the labor unrest, are probably best to be avoided at this level. They're not leading the market, so they're lagging the market. And given the demands of many of the strikers and studios, these are passes, I think, in your portfolio right now.
And certainly cost of living, again, inflation, a big part of that discussion. And I noticed Chipotle, a Mexican grill, shares down 8% on its earnings news. Apparently that company's been hit with inflation hitting some of their popular menu items. Restaurants certainly at the front line of this inflation battle with all the food inflation that we've seen. What about the restaurant names here?
Yeah, but this is why Ford called inflation public enemy number one.
President Ford.
President Ford. Thank you, Frank. I mean, throughout the 70s, this was the number one issue facing Americans for year after year after year. And, we're starting to feel it right now at whatever level income or savings you are, Frank. I mean, inflation is hollowing out Americans' ability not just to spend, but to save and invest. You're seeing it, spread through to companies like Chipotle, continuing to. So, I think there are places to make money in this market, but inflation is going to continue to vex every American. And, Frank, ironically, the least affluent among us, for which an extra, $50 or even $100 a month is a major impact. This is who's being directly hurt by inflation. And we're not seeing any spending cuts in Washington. We're not seeing any reining in of the proliferate spending and expansion of the money supply. So I think you got to buckle in for the long haul, and inflation isn't dead. It's just waiting to rear once again its terrible, ugly head.
On the air live with Jonathan Honig, Fox News contributor and portfolio manager at Capitalist Pig Hedge Fund. We've covered a lot of ground here. Jonathan, any other specific places where you are putting money now and or taking it off the table?
Yeah, look, it's not anti-American to invest outside of America. So I like names like foreign high yield funds, Frank. It's FYLD. Even India, I think you can buy right now. INDA. Sounds pretty esoteric, sounds pretty out there, but you always want to have that diversified portfolio. Talk with a financial advisor, make an informed decision. But I think now more than any time, Frank, is a great opportunity to step away from those previous leaders, the AI, and find out what's next. I think given the weakening of the U.S. dollar, it's likely going to be overseas.
And what about funds, Jonathan, for folks who are looking at their 401ks, bond fund versus stock funds? Any other general advice for what's going on these days?
Well, people have lost tremendous amounts of money in the safest of safe bonds, Frank. And as we're seeing interest rates move higher, those of our listeners who bought even certificates of deposit 3 or 4 years ago are looking at dramatic losses. So I think you have to be very careful about buying fixed income right now because rates in many cases are likely to move higher. One name I like quite a bit is CLIP. That's CLIP. Now, this is an ETF, Frank, that holds very short-term debt, so it's not going to be impacted by higher interest rates. And I think you want to keep those maturities very low because no matter what the Fed says, all indications are that rates are going to continue to head higher from here.
Right, and that means more pressure on the economy. The Fed chairman was careful with his words today, as I mentioned, forecasting a noticeable slowdown rather than a recession. Certainly, if he said, there's a recession, there would be obviously a negative market reaction. But will it be a soft landing, hard landing, no landing, and now a noticeable slowdown? Which camp are you in at this point?
Well, you're already seeing it, Frank. The interesting study out from the New York Federal Reserve just this week that said you had 14% of applicants who applied for an auto loan were rejected. That's up from 9% just in February. So you're already starting to see that continued impact on the American consumer, the American investor, the average American. So I think, despite some rosier data perhaps, I think most Americans are hurting. It's why, ironically, President Biden's, proclamations of Bidenomics is just kind of falling flat with many Americans, for which inflation is still, as they say, as Forbes say, public enemy number one.
Certainly, even though there's been no official recession declaration, it certainly feels that way to a lot of people, especially here in Hollywood. Jonathan, thank you very much for taking the call live with us here tonight. It's always fantastic to have you live with us here on the air, and look forward to speaking with you again very, very soon.
Best to you, Frank. Be well.
Thank you very, very much. That is the one and only Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Live with us here tonight, Mottek On Money on 790 KABC. Folks, it's jarring to have a car accident and hard to think clearly when you're hurt. So my friend, attorney Clark Fielding of Fielding Law, has created something to help you. It's a guide called Be Prepared Before a Motor Vehicle Accident. The guide is one page, fits right there in your glove compartment, gives you everything you need in case you are hurt in an accident. Go to clarkthesharklaw.com and download your free one-page guide and keep it right there in your glove box and put Clark Fielding's number in your phone under the word accident. So all you have to do is hit the number when you need him. Tell your family and friends to do the same. So if you're hurt in an accident, call the one we all trust, Clark Fielding. The number to call is 833-88-SHARK. Put it in your phone right now, 833-88-SHARK. 833-88-SHARK, and download the Be Prepared Before a Motor Vehicle Accident guide at clarkthesharklaw.com. You can get it right now at clarkthesharklaw.com. That's clarkthesharklaw.com. Mottek on Money continues here on 790 KABC. Good evening. We got some smooth jazz going there. That means 790 KABC welcomes Boney James coming to the Saban Theater on October 13th. Tickets are on sale now at AXS.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show. If you're caller 9, call right now, 1-888-790-5222 for Boney James coming to the Saban Theater on October 13th. Mottek on Money continues here in 790 KABC. Mixed finish to the day on Wall Street after the Federal Reserve decided to raise interest rates again after pausing most recently at their last meeting. They raised it today by another quarter percentage point, sending the prime lending rate, the prime rate charged by major banks to consumers and businesses, now going up to 8.5% with that quarter point bump today. Fed funds rate moving up a quarter point, and that means that'll be impacting the Fed funds rate and borrowing costs for credit cards, home equity lines of credit, business loans, and the list goes on. The Dow coming in for a closing gain of 82 points, settling at 35,520, and the Dow making it 13 winning sessions in a row, the longest such winning streak since 1987. The S&P 500 slipping just about 1 point at 4,567, and the NASDAQ down 17 at 14,127. The yield on the 10-year note, which impacts the mortgage rates out there, the fixed-rate mortgage rates, moving to a 3.86%. Crypto's moving mostly lower, with Bitcoin down about 200 now at 29,387. We see Ethereum down about 13 at 1869. Doge at 8 cents. The price of oil has been dancing around $80 a barrel lately, moving up 23 cents here this evening to $79.01 a barrel. At Southern California gas pumps, prices have been moving higher again. And yeah, there is that one station out there that still charges $8 a gallon for premium. Watch out for that one. We see regular back at $5 a gallon on average now in the L.A. Long Beach area. In fact, to $5.01 a gallon, according to today's AAA fuel gauge survey, up about 3 cents overnight. Premium now averaging $5.34 a gallon in the L.A. Long Beach area, and diesel now at $5.27 a gallon. Diesel also popping 3 cents a gallon in the last 24 hours. And now the latest news for you right here on 790 KBC. Mottek On Money continues here on 790 KBC. Good evening. This is Frank Mottek. The hot labor summer continues here in Hollywood. The strike against Hollywood studios continues. The Writers Guild of America strike has been underway since May. And now the SAG-AFTRA union also on strike for the last couple of weeks, with actors on the picket lines as well in front of the major studios. Hollywood is on strike with the production of nearly all of the Alliance of Motion Picture and Television Producers Associated films and TV projects featuring SAG-AFTRA talent now at a standstill. Actors on the picket lines to raise their voices over residuals, the threat of artificial intelligence, and challenging working conditions. Joining us live now, the former president of SAG-AFTRA, Gabrielle Carteris. Joining us live here, of course, actress and producer, trade union leader, also known as Andrea Zuckerman on Beverly Hills 90210. Our previous guest recognized you as well from Touched by an Angel, NYPD Blue, JAG, Criminal Minds, NCIS. The list goes on. Gabrielle Carteris, thank you very much for taking the call live with us here this evening.
Thank you for having me, Frank. Thank you so much. How are you?
Wonderful. Wonderful to speak with you again at this critical moment with the writers and the actors now on the picket lines, and you're among them out there. Give us an update and your view of how this is all playing out here.
You know, this has been a really challenging time. It was not a decision made lightly, and we know that right now people have been on the streets. I don't know if you've been a part of it. I've been at the studios. New York just had a big showing yesterday in Times Square. And it's been actually, I think that the energy of everybody, from the actors to the writers to actually people within our industry throughout, are really present and really ready to do whatever we need to do to get back to the table and to make a deal that's meaningful.
What's the mood out there on the picket lines?
It's been hard. I think there's actually, it's been hot, as everybody knows, but it's been very energized. I mean, having Fran out there really front and center, she's been clear and focused. That has actually helped to really bring everybody together and galvanize them. I have to tell you, I've been so surprised about the numbers. They just don't seem to diminish at all. I started walking with the writers when they went out, and it has stayed strong through that whole period of time since May 2nd, and it just seems to even be bigger and stronger now. There's been no waning. It's been really, people are clear. They know what they need, and they're asking for it.
Well, you certainly have commanded a lot of respect in the union world as president of SAG-AFTRA, having taken over, having succeeded from the late great Ken Howard, and we honor his memory as well. And now Fran Drescher, the president of SAG-AFTRA. So you've been at these tables and know all the issues on AI, for example. Where do things stand?
AI is an issue that's going on not only for us. This is clearly they're not willing to move at all regarding really what we need to have really a safe and and some autonomy into our work. They're not willing to move on that. And this is not only for us. Again, the writers are having this issue. I'm also the president of FIA, which is the International Federation for Actors. The world is watching the issues going on with AI right now, and the idea that people's work would be taken from them and they wouldn't get fairly compensated is unacceptable. And this is really something we're being faced with, and it has to change.
I've heard it described as automated plagiarism, where everything is kind of dumped out there and then regurgitated. Obviously, some very tough issues and already some lawsuits connected to all of this, where somebody's image and likeness and, of course, intellectual property are all involved.
You know, we fight for intellectual property on a regular basis. Not only in our contracts, we work on legislation regarding intellectual property, because that is what we have as performers is our image. What we have is our voice, our creation. And so it's very important for people to, we have to find a way to find protections. And it's something that you're seeing it right now, even in our government. They're really starting to understand the importance of this. But we have to have laws in place, and we must have language. It's very, very important. This is a time right now that if we do not take control of what can ultimately happen with AI, all workers will be affected and lose their earning power and their ability to go and take care of their families. We cannot diminish people's ability to really earn and to feel pride in what they do.
And certainly the cost of living, especially here in the Los Angeles area, continues to be onerous, and inflation still running hot, double the Fed's target. That was a big topic of discussion today. What about getting more money for the folks out there?
We need to get more money. Right now, what's been put on the table, in the next 3 years, we'll be making just what we've been made in 2020. There won't be an increase that's meaningful. We have to be able to change with the cost of living. We have to be able to change with inflation as it exists, and what's being offered right now, that doesn't make it possible.
And what about another big component here about streaming? I've seen that huge picket line in front of Netflix, for example. I saw Annette Bening out there. You were probably out there too, along with other big names. What about the streaming and changing those formulas?
You know what? Streaming is a business model really that has changed our industry, and that's what we're really looking for, wages that go and reflect the changes of the industry. Times have changed, so compensation has to change to reflect that.
And how would you assess the labor movement here at the moment? We have a unique situation here with a lot of people on strike, the hotel workers. Now you got the healthcare workers at Kaiser on strike as well. And, of course, the writers and the actors out there. We haven't seen anything like this in decades.
First of all, it's for the first time in decades, we have an administration that's very pro-union. And workers around the country are tired of feeling the squeeze. So we are in a time right now, we have an administration that's acknowledging the fact that workers deserve to be paid. They remember that the middle class, the working class, is really the heart of this country. It is what keeps us going. And so this is really a time that you're seeing people from all over coming together in support. We, SAG-AFTRA, have been supporting other workers in between the teachers and the nurses, and the same for Amazon. And for those people, they're also supporting us because workers together are what keeps this country strong. And so it has been incredibly invigorating and exciting to really see people take a stand and win the things that they are really fighting for, they deserve to have. And that's what I'm going to hope happens for us as well.
Certainly.
We're ready to go back to the table.
Any word on when that might happen?
No, I know that, Fran has made it perfectly clear. She said we are ready to go back and to go in those negotiations to get a fair deal. I know that the negotiating team, which has been fabulous, they have said the same thing. And, of course, Duncan Crabtree Ireland, who's the national executive director, this is an incredible team that's there negotiating this contract. And with the leadership of Fran, she said, ask us to come in today. We'll come back today. If you want us to come back tomorrow, but we want to come back with a serious conversation and a contract that really is meaningful.
And we've certainly seen movies alive and well with Barbie and Oppenheimer doing so well last weekend.
I know. That's right. They were doing well. But it's going to become harder and harder. The actors, even all the big movies, have actually, you've seen, they've walked off saying we're not going to go. And even doing the promotions for these movies, they're saying we are standing together. This is such a unified strike. I think unlike any that we've really seen in our history, but it's been already since the 1960s, where we had both the writers and the actors out at the same time. Everybody understands that this is a pivotal moment within our industry, and they are standing strong. So, yes, those films are out, but future films will not be made, as long as the strike is going on. So we're going to start feeling the crunch. And the only thing I could say, Frank, is for all the people who enjoy the art and the creation of film and TV that they went through that they experienced during the time of, really during the pandemic, when they really realized how important it was to have us, we ask them to please stand with us right now, because what we're fighting for is not just for us as actors, not just for writers, but for all workers. And so if they can come stand with us and really put the pressure on, we really can get through this to find a fair contract.
Gabrielle Carteris, thank you very much for your leadership, and thank you very much for taking the call. We'll keep the line open to you on obviously this very, very important situation, this drama that's playing out here in Hollywood, the strike by SAG-AFTRA against the movie studios, along with the writers, and Hollywood is shut down here at the moment. Thank you very much for joining us live here, and we wish you and everybody there all the very best.
And to you, Frank, as well. Thank you so much.
Thank you very much. Gabrielle Carteris, former president of SAG-AFTRA, live with us here tonight on Mottek On Money on 790 KBC. Don't give in to that constant joint pain. Take control. Take back your quality of life today with the help from QC Kinetics. It's Frank Mottek here. QC Kinetics is helping people every day right here and all across the country with their amazing non-surgical treatments that repair and restore damaged joint tissue. They use the latest advances in regenerative medicine, taking your own body's healing agents and concentrating them right in the area where you have that agonizing pain. This incredible non-invasive approach helps you take back control of your body, relieving the pain in your knees, hips, shoulders, or back. No invasive surgery, no harmful drugs or steroids, and no downtime. Summertime needs to be about having fun and making memories. Golfing, hiking, swimming, enjoying the great outdoors. Take control now and start living pain-free again. Call QC Kinetics. Locations now in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. 213-997-PAIN. Again, that's 213-997-PAIN. Mottek On Money continues here on 790 KBC. How is billionaire George Soros spending his money these days? The answer might surprise you. Let's bring in Aaron Bandler now, investigative reporter for the Jewish Journal, who's been keeping track of George Soros' spending lately. And Aaron Bandler, thank you very much for taking the call. Take it from the top and tell us about your latest report.
So George Soros is he has funded. There was a report that came out of the Washington Free Beacon recently saying that he and his son Alexander Soros provided $6,600 to Pramila Jayapal. She is the chair of the Congressional Progressive Caucus, and she's been in some hot water lately because she referred to Israel as a racist state, and she has since walked that back. But this is a pattern for Soros because he tends to fund a lot of left-wing progressive and anti-Israel causes. So some of these include funding these human rights organizations, like they sell in Human Rights Watch, Amnesty International, that abuse reports accusing Israel of apartheid. He has also funded various groups that support the anti-Israel boycott, divestment, and sanctions movement, like Dream Defenders is one, War and Want is another. So this is, and on top of that, Soros has also funded these various soft-on-crime district attorneys, including our very own DA here in Los Angeles. So that is how, that's Soros in a nutshell right there.
Certainly, and this, I'm not sure how much attention this got because it happened late last night, but the U.S. Senate passed a resolution last night declaring that Israel is not a racist or apartheid state in a rebuke of Congresswoman Pramila Jayapal, whose inflammatory comments sparked backlash ahead of a state visit by Israel's president. The House Republicans introduced that measure last week to put Democrats on the record after Jayapal called Israel racist for its treatment of Palestinians. The Senate, by the way, did not record a vote on the resolution. It passed at around 11 o'clock last night back east after senators, most of them had departed for the day. So that is certainly to be noted, and certainly that you're following. And as you noted, she did apologize for her remarks and voted for the measure.
That's right. But I think it's important to note that that right after she walked it back, she retweeted an op-ed from the New York Times that was decrying the quote-unquote hysterical overreaction to Jayapal's quote-unquote silly gaffe. So that certainly calls into question how genuine her apology was.
I know you'll be watching that very, very closely. And getting back to George Soros and the spending of his money for these district attorneys, certainly did support the DA that's currently our district attorney here in Los Angeles. Is that support continuing?
Well, as far as I know, last year George Soros had an op-ed in the Wall Street Journal where he basically defended his backing of what he called reform-minded prosecutors, and he says that he has no intention of stopping. So I think it's important to note that since 2016, Soros has involved himself in over 75 district attorneys' races throughout the country, and each of these races, every time he's donated, the candidate that received his money, like the majority of that candidate's money came from Soros. So Soros needs to have figured out that a lot of these district attorney races seem to be lower profile, and if we figured out that he can get involved in these races and put some on the scales a bit with his spending, and that's how you get gas going here in LA. It's how you got Chester Boudin in San Francisco before it got recalled. Alvin Bragg in New York has also received money from Soros' Color of Change, and so that's what Soros has been doing on that front.
And we're going to continue to watch all of these developments here. And from what we understand from the recall effort here, that recall effort is still alive, and it's moving through the court system here right now. And whether it'll be on the ballot before the election coming up remains to be seen. In the 6 o'clock hour, the Honorable Dennis Zine might give us an update on what's happening on that front. So we will be eager to hear more news about that. And, of course, the U.S. and Israel are very close allies, and given what's happening in the world right now, more important than ever. And on the business front, certainly here, a lot of close ties between L.A. and Israel, especially with the technology at the forefront and AI. Once again, got to mention that. Israeli companies are very much involved in artificial intelligence, right?
That's right. Well, Israel, generally speaking, has become one of the world's leading tech startups. Yeah, I mean, there's something on the forefront of AI as well.
Certainly. Well, thank you very much. Look forward to staying in touch with you. Aaron Bandler, investigative reporter for the Jewish Journal, live with us here tonight on Mottek On Money on 790 KABC. Big day for the financial markets today, with the Federal Reserve making the decision to raise interest rates, the short-term rates by another 0.25 percentage point, the Fed funds rate bumping up by another 0.25 percentage point, sending the prime lending rate up another 0.25 percentage point to 8.5%. We did see a mixed reaction on Wall Street today, with the Dow closing higher, up 82 points and up for the 13th session in a row. The S&P 500 slipped a point, and the NASDAQ gave back 17. I'll be back again tomorrow evening in the 5 o'clock hour. Right now, stay tuned for the Honorable Dennis Zine on the 790 KABC News Blitz coming up right after Mottek On Money. You're listening to 790 KABC.
Time offer. That's sweetdeals.com.